This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. It is Wednesday, August 12th, 2026. It's my Monday, but hey, half of the week is over already.
It's your Super Monday.
Yeah, it's actually...
That's fair to say, right?
I'm going to be busy. Yeah. I'm going to be a little bit busy for the next 10 days.
Hey, we're excited to see you on
stuff.
Bloomberg this weekend.
I'm excited.
Yeah, I'm looking
Joe,
forward
Matthew,
to
and
it.
I are going to be subbing in for Christina and David. So looking forward to that.
Okay, well, before that, we have some work to do.
We do.
Yeah, we do. We have a great program coming up today. Look, the focus over the last couple of days has been, what is this CPI report going to say? Well, now we know. The question, is it tame or is it lame?
I don't know. Let's see what Mike, is he going to go like this? Is he going to say lame? I don't know. So we're going to get into that. Also, the good stuff. Investors relaxing, though, I should say, off of this print. Mm-hmm. So maybe this is the good, tame stuff. I don't know. Kind of relaxing when it comes to the need for speed to maybe have the Fed do something on rates or raise rates. So we're going to get into that. We're going to get more on the trade in a moment. As we mentioned, Tom Keene actually this morning going boring when the CPI came out.
Okay.
Tom, I do listen.
We'll see what Mike says about that in just a minute. Also joining us, Dan Suzuki, Senior Investment Strategist at iCapital, on drowning in liquidity. Is that good?
I don't know.
Okay.
I think that's a bunch of risks, possibly, especially if that liquidity comes to an end. Hey, Bob Diamond, former CEO of Barclays, he's going to join us to break some news on an announcement, his latest investment. So we're going to get into that in just a moment.
Yeah, first on Bloomberg, a Bloomberg exclusive. Excited about that. Also, from dirt to the consumer, the companies and their C-suites and what they are talking about when it comes to growing their companies. Is it AI?
Yeah, we're going to talk about that. Some things with Rebecca Humkes. She talks to CEOs all the time. She works with them on growth strategy. So some of what she has to say, I caught up with her a little bit earlier today ahead of this interview. Might surprise you. So looking forward to that. Hey, just a reminder, be part of our discussion. We love it. We love it. We love it. Just submit questions to our team and we'll be answering them live on air. Just send them to Bloomberg.com/askradio. That's Bloomberg.com/askradio. And this is, of course, exclusively for our Bloomberg.com subscribers and also our Bloomberg terminal clients. But we love when you weigh in. Brendan, we love your questions. Send us more. They're always on the money.
Shout out to Brendan.
Yeah.
All right. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, he's got his eye on everything happening in the trading day. Here he is, Charlie Powell.
All right, I thank you very much. And here's what's going on. The CPI report, CPI Wednesday. You guys raised the question, tame or lame? I'm saying same. We've got the Dow, the S&P, NASDAQ all advancing. This morning's data bringing some relief to traders worried about geopolitical risks. S&P 500 index holding close to a record. Right now, 77.51. The record is 77.57, roughly 6 points away, looking at a gain right now of 0.3%. Dow Industrials little changed on the day, higher by 16 points, up under 0.1%. NASDAQ up 152, that is a gain of 0.6%. The Bloomberg Mag 7 index, though, trading lower, down 1.1%. All of this with the SOX, the Philadelphia Stock Exchange Semiconductor Index, up by 3.4%. Two-year yield, 4.19%. The 10-year, 4.68%. The 30-year, 5.24%. Gold, meanwhile, up $27 the ounce to $43.97, up by about 0.6%. West Texas Intermediate crude, lower little changed, 83.15 a barrel, down under 0.1%. Barrel of Brent, 88.85 now, also down by under 0.1%. Earnings news, specifically tech. CoreWeave after earnings up 18.8%. CoreWeave is a provider of computing that powers AI systems. Last night we also heard from Super Microcomputer. That stock surging by 18%. It delivered a revenue forecast for the current quarter that topped analyst estimates. After the close of trading today, all eyes will be on Cisco. Cisco up ahead of earnings by 2.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, they're reunited. That is a Bloomberg Business Flash.
We are back. Just for a few days, though.
It is vacation.
That's how August works.
You know,
that's just how August works.
It gets to August, and our bosses are like, "Are you going to take some vacation?" Because September gets busy.
Well, it gets to August, and we start thinking about Jackson Hole also.
Oh, we do indeed. And that brings us to Mike McKee. Also this morning's CPI print, but yeah, also Jackson Hole. Mike is, of course, Bloomberg TV and radio, international economics and policy correspondent. He's here in studio. Yeah, what's more important, this inflation print or Jackson Hole?
Jackson Hole, I think, to the markets.
Yeah.
Because this inflation print, you were asking whether I'd hold up an L or a T.
Is it lame?
No, I think it's like okay.
Well done.
It's not good. It's not bad. There's good and bad in it for both sides, the hawks and the doves. But what everybody wants to know is, what is Kevin Warsh going to do about inflation? And
does he have to do something about inflation?
Well, if he's going to reach his goal, which he insists upon, that they're going to make the 2% target, they're going to have to do something. Now, that something could be saying we're just going to leave rates where they are because they're restrictive enough, or it could be that they're going to raise interest rates. And he doesn't have to give forward guidance, the term he hates. He doesn't have to say we're going to raise rates at the next meeting.
Right.
But he could say if this doesn't come down fast enough, then we would have to consider raising rates. That would give people at least the sense that he's on board.
That's not his jam, is it?
Well, it hasn't been so far, but that's why the people on Wall Street have been upset with him and concerned about what he's been saying. So this is his opportunity at Jackson Hole, not to give forward guidance, but to say, here's how I look at inflation, and here's what I think how the Fed should be looking at it. Yes, I have task force, but for right now, this is what we're thinking.
Mike, on this print, though, energy and gasoline prices coming down. Is that even accurate to think about right now, given what's happening in the Strait of Hormuz, given that this is backward looking?
Well, it was accurate for July, but this is August. And
consumers are still paying over $4 a gallon now.
Well, what ended up happening was roughly speaking, they compare the average in July to the average in June. And because prices came down so much in June, the average in July still went down, but not as much. But now in August, so far, gasoline prices are higher than they were in July. So this could all reverse.
The cost of lettuce. We got to talk about this one. This was really interesting in the report. Cyclospora has an effect on grocery prices.
Yeah. Nobody wanted to buy lettuce.
Okay.
I go to the supermarket.
There's a lot of kind of one-offs in this.
There's a ton of lettuce just sitting there.
Yeah. Well.
Right?
What about jalapenos?
Also. You know, and yet it's expensive for a lot of people still. I heard Tom talking about going for some fish or something this morning, and he was like blown away by the price of it.
It wasn't a Filet-O-Fish, was it?
It wasn't a
from
Filet-O.
McDonald's? Because he's brought me those before.
You know, it's Tom Keene.
Okay. No, I know he brought me a Filet-O-Fish from McDonald's.
Oh, okay. Well, this sounded a little she. It sounded like he walked away. I mean, prices are still high. Right?
Well, prices aren't going to go down.
Right.
They go down for individual goods, but not the overall price level. And that's the difference is economists and the Fed look at the change, the month-over-month change, and how that affects the year-over-year annual rate of inflation. But consumers go to the store and say, well, I paid, $10 for this item last month, and I'm still paying $10 now. It's not going down, and that's why there's a decline in consumer sentiment, and that's why there are political implications to this whole thing.
Sir, go.
Well, I mean, Mike, you brought the political implications. Of course, just at this point, we can say a short time away from the midterms. There was a little bit of relief in uncooked ground beef prices. Is that a one-off, or is there a reason that we're seeing beef prices come down ever so slightly, 1.6%?
There were some. That's actually
most since 2020.
It's actually a fairly big move for 1 month, but there were a couple of grocery chains that cut prices for ground beef and hot dogs and things like that, which they said was, their effort to help America because it was the summertime and everybody's cooking out.
Okay.
So do those prices remain? Probably not. We're still watching the cattle people try to build up their herds, and prices are still high. So I don't think that's going to be an ongoing event.
By the way, have you ever had a brisket burger? We did.
Oh, yeah.
They're really good.
Yeah.
Right? Yeah.
Well, there's a restaurant here in New York, which shall remain nameless, that, makes one for about $35 a burger.
It's a good $35.
How come Tom never brings me one of those?
I don't know. We'll have to talk to him. Hey, one thing I am wondering, and we're going to talk a little bit, I feel like over the next hour or so, about the cost of tariffs. And Rebecca Humkis is on later in the hour. We're going to talk AI with her. But there's a lot of factors that are coming on that may ease prices, increase prices, and I do think about just whether or not growth is there to support a healthy economy, or whether we're starting to see any concerns that might slow down. I'm thinking about tariffs, whether that's kind of frustrating CEOs. I think Rebecca Humkus is going to talk to us a little bit about that.
Well, we have retail sales tomorrow. Is this your way of asking me back to talk about that question?
I don't know.
I mean, it depends on how people keep spending, and we don't really know. The Fed doesn't really know. There are some people, some economists who are concerned because the rise in gas prices earlier in the year was sort of offset by the fact that people were getting the bigger tax returns, and now that money is gone. So if we don't see any relief at the gas pump and in the grocery store, then it's going to be harder to maintain momentum going forward. At the same time, we have all this AI spending that's propping up the economy on the business side. So it's kind of hard to say where the economy is going from here. But what we can say is that inflation is at a point where we're basically back to where we were on a year-over-year basis before the war.
Okay.
And the hawks on the Fed, that wasn't good enough for them at that time. So one presumes it's not good enough for them now. That kind of leaves us, that's why I say it's okay. It kind of leaves us where we were, and everybody looking to the next CPI report to see if we've got a trend going.
Which we have a bunch, right? We have, is it two more or
one
more?
One more CPI,
report?
2 more PPIs because we get PPI tomorrow.
Okay, so it's not L.
Maybe we will have you back.
Yeah, but it's O. Oh,
okay.
Okay. Michael McKee, thank you so much, breaking it all down for us. He's Bloomberg TV, radio, international economics and policy correspondent right here in studio. Quick check on the markets. Don't forget, we've got some earnings coming also after the closing bell, including Cisco and a few others. Having said that, we've got a market trade where we're seeing tech names certainly outperforming, up 0.9% on the NASDAQ 100, Tim. That's good for a gain of about 271 points.
Okay, you're looking at equities. I'm looking at what's happening in the oil market over the last couple of days. I know you were out driving around a little bit.
I paid up at the pump.
Okay. Do you remember how much it was?
But whenever you're close to I-95, you're going
to get it.
Doesn't even matter if you're just off the
Tri-state
highway.
area. Enjoy.
Yeah. You get
well, it was 407 for me the other day. But the last 2 days we've seen oil prices rise.
Are you buying premium?
No, that's the 87 or 89 or I don't know, whatever. It's fine.
Whatever
it is what it is. Oil prices though. A little bit of a relief right now, but ever so slightly, 0.3% lower for Brent. But still, we're knocking at $90 a barrel for futures of Brent right now.
Yeah, keeping our eyes certainly on the Middle East, that's for sure. And let's get a market read while we're talking markets. In the words of our next guest, why liquidity is flooding markets and the risks that could drain it. Back with us is Dan Suzuki. He is a senior investment strategist at iCapital. It's an end-to-end platform for alternatives, structured investments, also annuities. They've got about $1.2 trillion in active global platform assets. Dan, back with us in studio. How are you?
Good, guys. How are you? Now, the big question is, what kind of Porsche or Ferrari are you driving with your super?
The kind that has room for car seats. That's the kind.
How's it going, guys?
Good to see you, Dan.
Yeah, good to see you.
We like liquid markets, but then there's a point when there can be too much liquidity, and we know that can get us into troubles. We've seen that certainly before. It's led to past crises. Your report about drowning in liquidity, it doesn't feel good. Walk us through what's on your mind.
Well, it's not that it doesn't feel good. It feels great, right? I mean, it's very rare that all the sources of liquidity are rowing in the same direction. I mean, we have basically supportive monetary policy, fiscal policy, banking, lending standards, and animal spirits are very much intact. So everything's good. It's just the question is, you look forward, are those going to last, and what could cause that to change? And I think there's a few things. I mean, interest rates are, multi-year highs. You have the oil story, which could turn into a Fed story. I mean, and we talked last time I was on here about the potential for tailwinds fading and turning into headwinds, and so there's a lot going on, and things are amazing right now.
Well, of those things that you mentioned, which one is most concerning to you right now?
I'd say probably. I mean, it's hard to disentangle the interest rate story from the Fed and the oil story, but I think those are the most. I mean, we're basically, our range has been 4 to 4.8% on the 10-year. We're pretty darn close to the high end of that range, and I think that the longer that this goes on, the more likely you're going to start to see the Fed move on a hiking cycle. The more likely the bond market's going to have to price that in. And I think as you get closer to 20-year highs on the 10-year, I think the market's going to start to wake up and volatility will pick up.
Did you say everything is awesome?
Awesome, amazing. And we should cue the song if you guys have the rights, and we'll play the
I don't know.
awesome
I know.
song.
Can I only play? So
Carol can sing it.
I don't mean to be. I can. You don't want to hear it though. I don't mean to be a skeptic, but I mean when everybody's so enthusiastic, when there's so much money floating around. I've seen this movie before.
100%.
Yeah. Why would this be different?
I don't think
every cycle has an end. Some go longer, some dips are shorter, but
I don't think it's going to be different. I mean, the stat that I cited in the report is basically, if you use the Bloomberg Financial Conditions Index and there's been a few articles about this, we're basically at, levels you haven't seen in 30 years, right, on that level. So, and I think that things are great. Earnings are surging.
But the comparisons now get very tough. To assume that these earnings growth are going to continue. We have a story in the Bloomberg that's among the most read that questions all of that.
I mean, we're at like close to 50% earnings growth.
Yeah.
Those are very hard numbers to beat. I mean, it's very unlikely you're going to see higher numbers than that. So that means we're going to be in a decelerating part of the earnings cycle. Yeah, I 100% agree with you, Carol. This is why I think that we're factoring a lot of the good stuff, not necessarily factoring all the risks here. I think we're probably at or close to peak liquidity. Doesn't mean that liquidity can't stay high, and that's the big question.
Right.
But peak liquidity is not. I mean, it's asymmetric, right?
Yeah.
It's not going to get much higher than it is today.
I just think about you teach a kid just because you got $10 in your pocket doesn't mean you need to spend it. I do think about even though there's so much money out there, it doesn't mean you got to put it to work.
Yes, but people are.
I
this
know.
is why. People have talked about the P multiple for the market coming in, and that's a sign of sort of more rational spirits coming through. But that's largely a function of sort of the disconnect between EPS and free cash flow that we're seeing. If you look at price to free cash flow levels, or what we look at trend adjusted, it's kind of a better version of CAPE. The markets are basically still at close to the highs. So it's not a cheap market.
So what does it mean for asset allocation?
Yeah, I think asset allocation, I think we talked about this last time. I think one of the big ones is diversification. I mean, every market you look at is basically playing off of the AI trade, and it's a very concentrated AI trade in some cases. I think having, things that are levered to other things. And also, defense is cheap because, it's been such a good time that having stuff that's been left behind, no one wants that, right? Who wants to pay? Yeah, go ahead.
No, finish, please.
I mean, when it's been a long time since you had an accident, you don't want to pay for insurance. I mean, every time we have a catastrophe, people have realized, catastrophe insurance makes sense and premiums go up. I mean, I think this is kind of the normal thing. So I think having those things in an environment where earnings growth might be slowing, in an environment where liquidity might start to be, coming down, that makes sense.
One last question I want to ask you. We've got a chart from Bloomberg Economics showing the real tariff rate. You expect tariffs to raise again. What will that do to inflationary pressures? And we got about 50 seconds here. And we'll bring the chart up for those who are watching on TV and YouTube. And again, it shows the higher rate back in April, the real tariff rate. We've come down from that, but you expect them to go up.
Yeah, I'm not making an outlandish forecast, right? They've already been announced, and so we basically on an effective tariff rate, we went basically from 10% to 6%. We're going to go back up to 10 or 11%, and so the Fed tells you they'll look through tariffs, they'll look through oil, but when you get dual oil shocks that are sticky, it's hard to look through.
Yeah, and hard for, I would say, the C-suite to look through when it's up and down, or there might be new ones coming out. That's
100%,
right?
100%.
You're smiling, right?
I'm smiling. Dan always brings good energy. So
he does bring good energy.
And he says there's a lot to smile about.
It takes a lot of Red Bull, but I try.
Everything is amazing.
Yes.
I'm getting the T-shirts.
It's amazing.
made.
Yes,
and the shirts.
Please I'll send you my address.
Good deal. Dan Suzuki, Senior Investment Strategist at iCapital here in studio. When we come back, a treat. Former Barclays CEO Bob Diamond on his latest investment in the world of financial services. He breaks the details right here.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We're on record watch once again for the S&P 500 index. Stocks higher. The S&P currently trading at 77.53. It is up by 25 points, up 0.3%. The current record on the S&P, 77.57. Right now we got the Dow higher as well, up 14, 53,807 on the Dow. Little change there. NASDAQ is up 0.6%. The NASDAQ 100 index up 0.9%. NASDAQ 100 getting a lift from companies such as CoreWeave and Super Micro Computer after earnings. CoreWeave, by the way, up 19.5% right now. Super Micro up by 19.7%. Two-year yield on this CPI Wednesday, 4.19%. The 10-year, 4.68%. The 30-year, 5.24%. Tomorrow, Thursday, we get the PPI report. Spot gold up $39 the ounce to $44.09, up 0.9%. West Texas Intermediate crude, 83.01 a barrel, down 0.2%. Brent, 88.80, a drop there of 0.1%. So again, the Dow, the S&P, NASDAQ all higher, up by 0.3%. We are looking at double-digit moves there on the menu for several restaurant chains. Wendy's jumping to the highest in 7 weeks after the FT reported that Nelson Peltz's Trian Fund Management is preparing to take the struggling fast food chain private. Wendy's shares right now are up by 11.7%. Mediterranean chain Cava Group sales came in better than expected. Shares are surging after earnings. Cava right now up by 14.2%. And Brinker International also higher after earnings. It owns the Chili's Grill and Bar chain. Brinker trading higher now, 13.1%. The ticker on Brinker, by the way, EAT. Recapping, S&P up 25, up 0.3%. Carol and Tim, that is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Well, today, and really just moments ago, Bob Diamond's Atlas Merchant Capital announcing a minority equity investment in Edge Focus. It's a firm that delivers technology, capital, and access to consumer credit. So we wanted to get the details right from the sources, the main sources. Bob Diamond is founding partner and CEO of Atlas Merchant Capital, a global private equity and alt asset management firm focused on the financial services sector. He's also chairman of Hyperliquid Strategies. Welcome, welcome.
Might know a thing or two about running a big bank, too.
Yes, I bet he has some stories. Also with us, Elliot Lorenz. He is co-founder and CEO of Edge Focus. They, as the company reminds us, delivers technology, capital, and access to consumer credit. Welcome, welcome to both of you. Thank you for bringing this to us. I want to first get to the investment. And Elliot, let's talk about this investment. What does this equity investment specifically do for you? It has to do with like operations, doesn't it?
It does. The important thing for us is being able to go into more asset classes and really invest alongside of our partners. What we do, as you mentioned, Carol, is provide capital as well as access, as well as several different things to the consumer lending market. And what we're ultimately looking to do is to connect.
A massive market, by the way.
Huge market. $200 million in unsecured consumer last year. We're trying to connect, at the end of the day, big investment firms like a Fortress with really large consumer lending firms like a SoFi.
Yeah, Bob, come on in on this investment. There's a lot of noise around credit markets, around private credit right now in particular. You have a very diverse portfolio at Atlas Merchant Capital. Yeah. Why make this investment right now?
You know, we have seen a real unbelievable development in the credit market since 2008, the great financial crisis. And I think so much of credit ended up on bank balance sheets prior to 2008, particularly outside the U.S. You know, the big banks in France, the big banks in the UK, all the credit was on the bank balance sheets. And we have seen a real development. Some call it private credit. You know, it's Edge Focus, it's Fortress. There's so much diversification. And I think that's why we have had such a long period without a real blip in credit. It's become, you know, it's a real credit to the U.S. capital markets. I think in terms of consumer credit, and I saw this, you know, through the lens of Barclays. I saw it very much through Barclaycard, which dominated the credit card and consumer credit market in the UK. Is again, it's much more diverse. It can be spread out, and I think we have originators of consumer credit like SoFi in Edge Focus. We have capital that likes to invest in consumer credit like Fortress. And I think one of the things that we can do together is we can find more originators, we can find more investors. And, you know, when we look for an investment, you know, you want to have someone that has a unique position in their market. That's Edge Focus. You want to find someone that has strong leadership. That's Elliot and the team. You want to find a business that's profitable, but most importantly for us, you want to find a business that has both a willingness and ability to grow. And this can be a significant increase over the next 3, 4, 5 years with access to capital to grow this business. So it's unusual in financial services to look at investments where they can be multiples of where they are today. But what Elliott and the team have built can be multiples of this. It's a big market.
You mentioned unique focus that Elliott has and his team. What is that unique focus, Elliott? Because the consumer credit market, a lot of players, a lot of folks in there. What is it that you guys are doing differently? And I'm curious then, like what you think they're doing differently that's appealing.
We do 3 things really well. We have access to a ton of data, our modeling approach, and then access to various other consumer lenders. From a data standpoint, hundreds of billions of data points in the U.S. consumer across lots of platforms. We know really well at all times what the consumer is
Where's that data
like.
coming from?
2 main sources, from platforms themselves who issue loans, as well as the credit bureaus. Lots of other alternative data sources as well. From a modeling standpoint, we have PhD researchers where all they do every day is research how to model the consumer, see what the latest trends are, and then finally access. None of this matters unless you have really good access across lots of different platforms.
Bob is.
They have one more thing. They have incredible.
This is someone who did, I assume, the due diligence.
We did a lot of work on this. They have incredible discipline. And both the originators and the providers of capital love what they see here because of the discipline with their own capital, but also with their advice and counsel. So it's in underwriting, but also in advising.
Does that mean only certain types of consumer credit that you're going to, like certain categories, certain types of, like tell us, is it top tier? Like what are you going for?
We look across the board. Generally speaking, we can provide the most value in near prime and subprime credit.
Near prime and subprime. Okay.
So on that, Elliott, SoFi and Happy Money are 2, existing deals that our Bloomberg News team has reported on. Would you think about expanding to, I don't know, other places like buy now, pay later firms, for example?
Absolutely. I think it's part of the reason for the investment. We want to grow beyond unsecured, which we're really big in right now. We're getting much bigger in auto. We want to be in point of sale medical. We want to be in home improvement. There's a ton of areas for us to grow into.
What are some? Are you talking right now to any specific buy now, pay later firms or any of those firms in the spaces that you just mentioned right now?
Many of them, absolutely. It's
so we should expect deals. We should expect deals to be announced
absolutely.
soon?
Our LPs are asking for it as well.
Okay.
It's got really neat characteristics.
Do you think that?
We're actually going to have a pretty big announcement in about 2 weeks. So.
I love this.
So, okay,
all right, well, you guys
so
gotta
mark
come back.
the date. But that's appealing to you, that part of the market.
Carol, as I said, it's about a unique position which they have. It's about strong leadership. It's about profitability. But most importantly, what we love is we're not just great investors, we're great operators. We love to roll up our sleeves, go out and visit clients, help them think about expansion. And when you look at a business that is this disciplined and this profitable and this focused with the market out there in consumer credit and beyond consumer credit, this is exactly the kind of investment that gets us up in the morning.
Well, so then what are you going to do, Bob, for Elliott and his team? You say you guys like to roll up your sleeves. You're making this injection of capital. You're now a minority owner in the firm. That's just the beginning, right?
Do you have an office there yet?
First and foremost, when Carol and Tim call, I come here to Bloomberg.
I like that. And maybe, they're out in Denver, so maybe you could go do some skiing this winter, too.
It's out in the ether now, so. But yeah, how involved? Like it sounds like good old fashioned.
So Fortress is a great partner.
Yeah.
There are other institutions that David Seamus and I and Brian Saunders have been very close to over the years in other investments or in our career. And David was with J.C. Flowers in my time at Barclays. We know a lot of people that would be interested in being capital providers, but until now, they have not heard about Edge Focus, and they have not heard about the business model.
Who are the investors already involved with you? What other investors might be coming in? You talk about the capital providers. Like who are we talking about?
All the really large private credit firms you've probably heard of. Like I said, we've talked about Fortress publicly quite a bit. Several others as well.
Okay, so more.
Yes.
More.
I noticed in the press release that this is focused on hiring efforts. Part of this injection of capital, partly focused on hiring efforts to build out a big part of your team. I'm curious about talent that your firm is targeting in a market that's really, really competitive.
Incredibly competitive market. The biggest thing for us is hiring researchers, especially in the age of AI, making sure that we can find folks who really understand the data, can use AI tools effectively, efficiently. It's one of the most important things for us. Over 2/3 of our firm is technology-based.
What goes further? You're already very technology focused, AI focused. I'm curious, like What's the next step? Where do you go with all of this?
New asset classes. We've done a lot in consumer unsecured. We have a long way to go in subprime auto. We have a really long way to go in point of sale, and there's several other asset classes for us to get into.
Bob, provide some context here, given your history in banking, and you know how what Elliott's firm is doing, in your view, is different from the way that a big bank can profile a consumer.
I think it's a number of things, but I think first and foremost, the traditional banks prior to 2008 just had a very, very different approach to managing what was in their portfolio. You'd see the quarterly earnings, and you'd see a little bit of provision here and provision there, but it was not really asset or loan specific. Even in Barclaycard, which was really consumer credit and unsecured consumer credit, it didn't have the depth of this. So it's the incredible discipline and the incredible technology that they've brought to understanding credits, so that the separation from kind of near prime to prime and subprime and things like that, the number of gradations on that continuum are incredible, and that's what they've done. So they're much, much better at managing access to credit and the return that comes from credit. And I think we've seen it broadly in the market. Since 2008, we haven't had a blip in credit. We've never had a cycle quite like this, and I don't think it's about to stop. Because there are so many more participants, so much more technology, artificial intelligence that's being applied to analyzing the risks associated with every single piece of credit.
Are you saying this time is different?
I am saying this cycle is very different.
This cycle is different, okay.
Because of technology, because of AI, because of firms like Edge Focus,
Okay.
Meaning that...
But by the way, it doesn't mean there won't be mistakes.
Right.
For people that don't use that technology, for people that don't use Edge Focus, there will still be mistakes, but I don't think they'll be systemic. They're not going to be across the piece. They're not going to be a crisis for the industry. They may be a crisis for an individual fund.
So in other words, not just that the risk is spread, but if somebody who doesn't have the great oversight or risk...
There'll still be mistakes made, Carol. There's absolutely. And I think what will separate Edge Focus is more and more people are going to want to have access to people like Elliott and his team, so they can move into that echelon without trying to build it themselves.
So let me ask you, there are always cycles, and I'm just curious how exposed Edge Focus is specifically to consumer credit, and how will you guys be protected if ultimately we see financial conditions tighten? Things go through cycles, and then we start to see end user delinquencies increase significantly. I mean, these things happen.
Absolutely. We're very long consumer credit. There's no question about it. At the end of the day, we need to...
But what do you do to mitigate risk? Like how?
It's all about having that loan level selection where we can use all the data we have at the individual borrower level to ultimately buy better portfolios of assets for investors.
So you're saying the data, the algorithms, the AI,
and we also have to monitor it really well too. We've built out tons of proprietary internal platforms where we can watch this stuff in a real-time basis, understand exactly how the consumer is evolving.
And so far, in terms of issues that have gotten you into trouble, like what percentage?
I mean, look, there's no investment that's ever perfect, right? You go back to 2022, 2023, for example, inflation was really challenging on the consumer, there's no doubt. But you learn a lot from that. You add into your algorithms, you add into your models, and ultimately you create a much more sustainable, defensible platform.
Well, Carol brings up a good point, and what I heard from you just now speaks to what it sounds like you have what you think is a very solid real-time view of how consumers are doing. We try to figure that out each and every day on this program by looking at data that we get from the Fed, data that we get from different bureaus, alternative data as well. How is the consumer doing?
Yeah, we have a lot of really cool insight into how the consumer is doing. What I can tell you is that applications continue to increase across all the platforms we have. Applications are up year over year on the
Is that a good 20%.
Thing? We're actually seeing delinquencies stay very, very consistent.
But consumers need more credit.
They are, and we're actually seeing an increase overall in debt-to-income ratios across consumers. Although the consumer looks to be needing some more credit, and that's being shown in the applications, delinquencies are being pretty constant right now.
Why is that, Bob? What do you when you look at that cycle or that data, those data points?
Which part of it? The fact
where you said that debt to income, right, is rising, and yet delinquencies are low. How do we explain that?
I think it's more discipline in the system and more providers of capital. So I think the same thing I talked about since 2008 on the investor side or the bank side in terms of their portfolios, I think consumers are much more mature, much more sophisticated. So it's not surprising that you would see less of an increase in delinquencies than you would in the amount of outstanding credit. That would be unsurprising.
So, Bob, this is a minority investment in Edge Focus right now.
Are you going to ask when it's going to be a majority?
Yeah, that's exactly what I was going to ask.
Sorry.
Is this the beginning of something?
Perfection is never.
Is this the beginning of something, or is this
absolutely the beginning of something?
Is there going to be more money coming from you, or do you think this is enough for them to go out, do their thing, and then there's an exit at the end?
I think the beauty of being Atlas Merchant Capital is a couple of things. One is our investors are very, very patient. If we go to them in 3 or 4 or 5 years and say, this isn't going to be a normal cycle, we want to stay in this longer. We have a number of large sovereigns. The biggest issue they face every day is reinvestment, not exit. So we have that option in terms of the relationship we have with our investors. But I think most importantly, if there was need for more capital, because the business is growing and valuations are going up, that's a good presentation for us. It doesn't mean we would go to majority. That would be unusual, and that might be in a distress situation, which would be the furthest thing from our mind in this situation. But if we have opportunities down the line to add additional investment at higher valuations because the business is growing, both in terms of products and in terms of customers and clients, that's fantastic.
So we'd be remiss. We've only got about a minute or so left here, Bob. You have seen, iconic for anybody who's watched Wall Street and financial markets. You've seen a lot of different cycles, good, bad, different. What do you make of this market cycle, which is there's angst, and yet we hit records? And how do you make sense?
Well, I think two things, Carol. And I think on the one side, and I see this, I've been very, very fortunate to be the chair of the advisory board for the U.S. Export-Import Bank with John Jovanovic and the team. And they, for the first time in decades, are profitable. They are really driving performance with middle market companies across the U.S. And what shocks me is how profitable they are. What shocks me is how excited they are at the tailwinds coming from this administration in terms of less regulation, more pro-business. And so the CEOs of middle market companies across the states are pretty excited. I think in terms of the cycle with AI that people are talking about, and I suspect that's the other piece that you're asking.
It is.
I think there'll be a correction. There'll always be a correction. Every technical innovation we've had, from railroads, from electricity, from the internet, will have a massive correction at some point. It doesn't feel like it's going to be tomorrow. But with any technical revolution like this, there's going to be corrections. It's not going to be one. It doesn't feel like it's around the corner, but I can assure you there'll be a correction. I just can't assure you when it's going to be.
I don't know. Everybody keeps talking about it's good till 2030, and then it's like a big
that's
question.
Just what I feel like that's just what the hype.
Hope's not a strategy.
That is so true. Gentlemen, when you have more news, please come back. We really enjoyed this, and thank you for giving us this opportunity.
Thanks for having us.
Yeah,
Bob Diamond, founding partner and CEO of Atlas Merchant Capital. Also, he's chairman of Hyperliquid Strategies, among many other things. Also here, Elliot Lorenz, the co-founder and CEO of Edge Focus. Guys, thanks a lot.
Thank you. All right, guys, let's get back to the markets on this Wednesday. Back over to Charlie Pellet.
Thank you very much, Tim and Carol. Here's what's going on. The Dow, the S&P, NASDAQ, they're all higher. In fact, right now, I can tell you that we are looking at an intraday high with the S&P 500 index. Indeed, trading at a record 77.58 right now. We're up 30. That is a gain of 0.4%. 77.57 and a decimal is the old record on the S&P right now. 77.58. Got to keep it locked into Bloomberg Radio and television, and of course our online platforms as well to find out how things will shake out at the close. Dow higher as well, up 41 right now, not even close to a record, up by 0.1%. We've got NASDAQ up 190 for the NASDAQ Composite Index. That is a gain of 0.7%. The NASDAQ 100 Index up by 1%. That index getting a lift from the likes of CoreWeave, up 19.5%. Also, Super Microcomputer up 19.7%. Both of those companies surging after earnings. Right now, the 10-year on this CPI Wednesday, the 2-year 4.19%. It's the 10-year at 4.68%, and the 30-year currently yielding 5.24%. Gold, meanwhile, up $41 the ounce to $44.11, up by 1%. West Texas Intermediate crude, $83.30 a barrel, up 0.1%, and a barrel of Brent, $88.97. Brent up by 0.1%. Small gains there, but perhaps the key takeaway, we are seeing a turnaround for crude. Have been trading lower, little changed and lower for much of the day, but right now up by under 0.1%. After the close of trading today, we're going to be all over this. Cisco Systems, the world's largest maker of networking equipment. It will deliver quarterly results, also providing an update on its push to capitalize on AI spending. Now, ahead of earnings after the bell and part of a broader tech rally, we do have Cisco shares up now by 2.8%. What a deal in the sports world today. Thrive Capital's Josh Kushner and former Disney CEO Bob Iger are buying the LA Lakers basketball team for a record-breaking price of more than $12 billion. Shares of Knicks owner Madison Square Garden Sports also moving on the news. MSGS on the ticker symbol. Right now, it is trading higher by 4.85%. So again, recapping here, we've got the Dow, the S&P, NASDAQ, all advancing. S&P 500 index is trading at a record 7758. That is a gain right now of 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right to it because there's lots of things we can talk about. We mentioned about earnings growth and earlier in this hour and how it's going to be tough to beat the numbers we've got. I do wonder about what's on the mind of CEOs. Maybe they are worried about earnings growth going forward. Someone who has some insight into that is Rebecca Humkes. She's lecturer at the London Business School, faculty also at Duke Corporate Executive Education, previously served as a fellow at the White House's President's Council of Economic Advisors, and she advises companies on high growth strategies. She's the founder of her own boutique consultancy firm, author of Survive, Reset, Thrive, Leading Breakthrough Growth Strategies in Volatile Times, and she joins us in studios. Good to have you back. We caught up a little bit earlier today. Let's go right to it, though. What are CEOs concerned about right now? Because we had a market guest. Everything is
Dan Suzuki from
amazing.
iCapital. I'm really glad. That's exactly what, as you were reading that, I was like, well, Dan just said everything is awesome.
Amazing.
It's fine.
Is it?
So there is definitely an optimism in the environment, which I think is warranted. I mean, one thing is that uncertainty is very damaging for our brains. And when we're facing a lot of uncertainty, as we really did last year, we frame uncertainty as something negative, right? And then we automatically think, oh, things that are uncertain, that's going to be a downturn, that's going to be a recession. And I think what we're seeing now is almost bringing uncertainty into the day by day rather than adjusting for it, which is allowing some of this optimism to come in the market, which is good, right? I want CEOs to reframe that uncertainty is neither good or bad, it's just the future. So I would say, Carol, that CEOs are relatively optimistic, but the crude way that I'm looking at it, and it is crude, is if you draw a continuum of do you touch dirt or do you touch consumers?
I love this.
The closer you are to dirt, the more bullish you are right now. So if you're in infrastructure, mega projects, ports, anything touching the data center, you're seeing the next 1 or 2 cycles as an outsized growth opportunity. If you're kind of touching something that goes through someone else that eventually gets to the consumer, it's pretty good, but you're still looking at the margins. If you're closer to the consumer, you still have a growth story, but it's a little bit more cracks under there because there are certainly cracks in the consumer economy right now, and every CEO will admit they're concerned about the consumer.
Every CEO.
That's interesting.
Every
I mean,
CEO.
Yeah.
Like this,
we just heard from Elliot Lorenz and Bob Diamond,
Yeah.
and they're saying they have the signals, and they're saying although consumers are looking for more credit,
Yes.
which you can interpret that however you want.
Well, you can't fight that, right? The numbers, but what they.
But if their delinquencies are down, then consumers doing pretty well, right?
The consumer, the K-shaped economy is still here. And I know that, some people in the White House would like it to go away. The data is pretty clear. The K is here to stay. Now, what we saw from the Bank of America data this week was that the lower part of the K is increasing spending, and we're seeing a little bit less, which is great to see. But that doesn't mean the shape goes away. It means the shape is not steepening at the same rate as it was before. We're seeing personal savings rate at the lowest that they've ever been. We're seeing the number of discouraged workers who are just out of the workforce, very, very high. Labor
That's
participation
worrisome.
is
The
the
not
lowest that
in
it's
labor
been.
force,
Not
right?
in the
The
labor force.
NILFs.
Right.
And we were talking, we were talking inflation today at jobs last week. And so again, if you want me to paint you a happy consumer story, I can find the data. Tell me the story you want to tell. I'll make the data tell that story. But a small percentage of consumers are having the time of their life. The majority of the consumers are still going on this day to day. And what we have to remember is that chaos has a cost, and consumers pay that cost too. They are exhausted. Shopping for value is hard. Waiting, if you don't like your job, but you're afraid to get a new one, so you're sitting in it, that's emotionally draining. So when we say worried about consumer, it doesn't mean the consumer is going to fall off the cliff. It means that the consumer is living in day-to-day chaos, and that's placing a tax on our day-to-day American consumer.
I love that concept. I mean, I don't love that concept, but this idea of a chaos tax.
But does it stay like this? Because I don't know. We've been talking about this for a long time. It hasn't gotten any better.
Yeah.
I mean, like you said, you can pick the data and figure out which story you want to tell. But what changes this?
So there's policy intervention. There is no CEO, and we'll go back to the CEOs. No CEO is ever going to ask for certain times or stability, right? If you're the CEO of a company, you are prepared for uncertainty. We would like less chaos, though. What we're seeing right now is we've normalized system shocks every couple of months, but this affects policy, right? If we think about the Federal Reserve, they're supposed to look through supply shocks. How can you look through something that's going to happen every 2 to 3 months? So all of these tried and true things we have are getting affected by this level of chaos.
Carol, this is what Con Davis told us, the CEO of Burnett Technologies, just last week, right? They make, they're in the U.S., they do manufacturing of these, you don't want to call them guns, but like they look like guns, and they shoot sort of pellets, and they're, defense technology. He's like, we just want less chaos.
Yeah, right, exactly. Just
and let's
pick a
more
policy.
stability.
Yes,
Right?
yes.
It's like
not
making
less
a decision.
uncertainty. It's not being immature and asking for less uncertainty. It's less chaos. Because for an organization, chaos has a cost. You have paralysis in decision making.
Right.
You hold off on hiring. You hold off on sometimes making M&A. You hold off on big investments. So chaos has a systemic cost because you have a lot of investment dollars and people and decisions sitting on the sidelines. And constant paralysis actually weakens this growth and performance muscle that teams have.
It's like not making a decision, right? You sit there and you just
But what you don't realize is you're not just moving
it.
slower because you didn't make the decision. Growth is a muscle. So as a team, when you're executing in the market, you're getting insights on your customers and consumers, you're bringing those insights in, you're building this muscle as a management team. When you go into this constant paralysis, that muscle actually atrophies, right? And so if you have entire systems where industries are just sitting in a bit of this paralysis, that's going to become system-wide pretty soon. So that's why we're saying chaos has a cost. Uncertainty is great. Uncertainty can be a great time to grow. It's a great time to learn, but chaos places a real tax on us.
It's funny. I was going to talk about AI. Sorry, team, and we didn't get there. But what's interesting is what you say is that companies are building in to their muscle shocks, right? Because we've had so many. Just got 20 seconds.
If I look at the beginning of the year, what CEOs will tell you is, I'm expecting to see more uncertainty, but I think I'm better at it now. And that's good news, but we shouldn't need to have built that muscle on top of all the other muscles.
Yeah, that is so true. Next time I want to talk Detroit, and I want to talk agentic shopping and so much more.
Got a whole long list. That's for next time.
Come back soon. Rebecca Humkiss, thank you.
My pleasure.
Always appreciate it. Lecturer at the London Business School, faculty at Duke Corporate Executive Education, runs her own boutique consultancy firm, advising companies on growth strategies. Yeah, great.
She does it all.
She does do it all. When we come back, we're going to get a check on trading and also some stocks on the move. Stick around. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. Hello?
Hello.
Is my mic on?
Your mic is on. I can hear you. Yeah.
Okay, just checking. Audio, video. We can do this. All right, let's take a look at the market, folks. We're heading into the last hour of trading. And off our highs and lows of the session, we're up not even quite 30 points, but almost 30 points on the S&P 500. That's good for a gain of 0.4 of a percentage point. NASDAQ 100 up 284 points. That's good for a gain of almost 1 full percentage point. And I meant to look at the S&P. I know you're going to probably go to energy.
You know I will. You know me by now.
I gotcha. Yeah. 266 names higher in the S&P 500, 235 to the downside, 2 unchanged.
All right, energy. No, nothing happening.
All right.
That's it. We're still just shy of $89 a barrel for Brent futures, WTI above $83 a barrel. The real story is this is up 46% this year.
I just remember the Persian Gulf War when it went up to was it 140 a barrel or so?
Wow.
Yeah. I don't believe I'm wrong.
No, I don't either.
I remember
All
covering.
right, here we go. Okay, we don't have time for this part,
This
Carol.
is why
I know she was going to do
I
what
have
she's going
this
to do.
handy dandy little thing. It's called the Bloomberg Terminal, but I think it was 140 when it went up to.
Dun, 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 dun.
Dun, dun, dun.
Carol gets an idea. Here's I'm just going to narrate a little bit. Carol gets the idea of some sort of thing that she wants to look up in the terminal, and she's like, I need to go back and I need to find this right now. And then you can watch her brow furrow as she looks at the data
All right.
and tries to find it go back to the early
We have to go back
1990s.
further.
Okay.
I look at
In the meantime, I'm Tim Stenovec, along with Carol Masser. Let's take a look at some stocks on the move today. We're joined by Bloomberg News cross-asset reporter Denitsa Seikova. Denitsa, let's talk about a company that we just heard results from late yesterday.
CoreWeave, it's been the talk of the day. The ticker, of course, is CRWV. We've been talking a lot about AI spending frenzy, and this has been the proxy of it. We're seeing very fast sales growth, and investors are pretty excited. The stock jumped as much as 23% in earlier trading. Now it's about 20% up. It was an interesting name that was caught in a lot of volatility. We've been talking a lot about situational awareness, but around that leverage sell-off, that was one of the names that was under a lot of volatility. That said, even before today's jump, it was already up 26%. So clearly, big winner. The sales number was very strong, projection around 3.536 billion. The Street was expecting lower than this. So pretty impressive. The backlog number, that's what everyone is looking. Over 100 billion of backlog. This was a quarter end. Really impressive. And, we don't have many public companies that are neo-clouds, and we don't have a good proxy for that.
Nebius, too, is another one that's higher, too, right? That came out with results.
Okay, but you go back to what happened last year with CoreWeave. I mean, this stock in June of last year was trading at $183 a share. Now it's down to still higher by 18% today, but $107. So it's still down 37% since then.
Last year was very volatile. This year was very volatile, but this is definitely promising. All the numbers are very strong. The revenue number actually doubled in the second quarter. So it seems like the Street is very impressed with this earnings report so far after a few pretty difficult weeks.
Okay, that is ticker CRWV, CoreWeave. How about some pomegranate glazed salmon?
Exactly.
That's disgusting.
Oh, really? You're the only person who thinks that.
Pomegranate
too much,
should
too
not,
sweet.
Yeah, wrong.
Well, I don't know. What did Kava say about the pomegranate glazed salmon?
Well, they're excited, and this is where they actually make profit. It's the pomegranate glazed salmon. We're talking about pita chips flavor with sumac, sour cream, and onion. All those extras and all those things are paying off. People love to pay for more protein.
Remember Tom Hanks in Big when he ate the caviar and he was like rubbing his tongue off?
Well, I don't know. It's working. The ticker is CAVA. Stock is up more than 14%. Earnings are going great. The company saw a 9% jump in sales at established locations. We obviously had a parasitic outbreak that weighed on sales, but necessarily it didn't disrupt supply chain, so the company is doing great.
But they don't really do salads, right? They do more.
Yeah. It's kind of a healthy slop bowl.
I've had a salad.
Healthy slop bowl. I like that.
It's like a Mediterranean.
I mean, okay, they do salads, but that's not like their core. Their core
you throw
product,
a couple
right?
olives in, and it's a Mediterranean salad.
A few dips and everything. I like it. It's fun. And you know who's splurging on the dips? It's lower income guests. They're paying for the add-ons.
Okay.
So that's interesting.
All right, if you don't want that, you can go to Wendy's.
Okay, you can do the greens bowl too. So yes, they do have salads, of course. But.
If you're not about healthy Mediterranean food, you can go to Wendy's. Which is also great. The stock jumped about 12%. The ticker is WEN. We've been talking a lot about the company going private.
Yeah.
Of course, Trian Fund Management has been the firm associated with this. The firm already holds about 16% stake in the company. The company has been under so much volatility. Just generally, fast food companies have been struggling. But this is the first time this is not the first time Trian has explored this. It's been going on for a few years, and their last earnings report wasn't great. They say traffic, value, franchise economics are not working great, so a lot of pressure there.
Now I'm just hungry for a little neo-cloud sandwich. That's what I'm going to put out.
Square patty on that burger.
Num, num, num. All right, Denitsa, thank you so much. Check out our Stock Movers podcast, episodes, 5 minutes, big winners, losers. You can find it on Apple, Spotify, or anywhere you get your podcast. More than $140 a barrel oil. That was back in 2008.
Okay,
July.
so that was not the port.
Just before the GFC.
Okay, there it is. Okay.
All right.
Okay.
I just want to get it right. Stick around.